All right, thank you, Janice. Talking about your money now. And are you about to co-sign on a loan for a loved one or a friend? Our expert is saying, don't do it. Stewart Welch of the Welch Group joins us now to explain. Okay, before you jump into this, I will say, you know, a lot of kids getting college student loans, they can't get them because a lot of them don't have credit. There's no way for them to get them unless a parent does co-sign. What do you do in that instance?
Well,
Still say no?
I don't. I think there are cases where it is appropriate to do that.
Okay.
So, but I think in general, you want to go in with your eyes wide open. And there are lots of risks associated with people don't think about, and that's what we want to cover today.
All right, let's talk about some of those. And you do talk about high-risk lending, and clarify that a little bit.
So high-risk lending, so let's talk about maybe lending money to a friend. The reason you're lending it to them is because they couldn't get money, they couldn't get a loan at the bank. And let me tell you, the bankers are really good assessing risk. And if they say no, that means that they think there's a high chance that they will default. And if you step in and take that loan, you need to recognize there's a high chance of default. If they don't pay, you're going to have to.
So you're going to be on the hook. That's the bottom line. So be careful of that. You know, and not only that, you talk about family and friends. That can make the relationship kind of rocky, right? Depending on how that goes.
Mike, I think every time it's going to change the nature of a relationship. Maybe only a little bit, maybe a lot. It always changes the relationship if there's a default. And so I think you just need to look at that. And I don't know how to explain it. Maybe it's that kind of subservience that you have with a lender and a borrower.
Okay.
But particularly with people that have a relationship before, it will change the nature of that. You want to be careful.
Does it hurt your credit every time you co-sign?
It does not necessarily hurt your credit.
Okay.
It depends on how that credit is reported to the credit bureau, how that information is reported. But it can be reported to the credit bureau, and if, as the co-signer, the person who's responsible for the loan is late or defaults, that could bleed over into your credit and hurt your credit score.
Oh. Now, also, there are tax consequences about this. We were talking about this, and you're talking about some things I didn't know. And I bet a lot of people out there don't know this.
Yeah, they can. We had a case during the recession. There was a group of investors. They borrowed money on a loan. The bank called the loan just all of a sudden. They had never missed a payment. And these guys, some of the guys didn't have the money because they had no notice. And so they actually went into settlement negotiations with the bank, which is not unusual. It's very typical. Right. And they settled for less than the full amount. And what happened is the bank turned around and sent it what's called a 1099-A. And the difference between that settlement and the actual amount that they owed became income, reportable income on their tax return.
Well, and another instance I know that popped up, God forbid if you co-sign on a student loan with your child, something should happen to the child, but you're still on the hook. Like the loan companies are going to say, well, I'm sorry something happened to your child, they passed away, but you're still going to pay that money back, right?
Well, there are a lot of nuances around the student loan. So in some cases, if a student actually dies, that loan is forgiven. So again, you want to look, it depends on where you got the student loan and what the terms are. So you want to be very careful when you're looking at that.
All right. Well, Stewart Welch, some good information this morning. Be careful if you're thinking about co-signing on a loan. All right, entertainment news, Tom Cruise takes